If you've been watching the headlines, you've probably seen two totally different stories about the Texas housing market. One says sales are up, prices are holding, the market's coming back. The other says inventory is piling up, sellers are cutting prices, and buyers are stretched thinner than ever. Here's the thing, they're technically both true. And today I'm going to show you exactly why. I pulled the latest data from the Texas Real Estate Research Center at A&M, which tracks more than 50 MLS systems across the state of Texas. Then I broke down exactly what's happening in Austin, Dallas, Fort Worth, San Antonio, and Houston, because here's the real headline. Texas is finding activity, but it has not found balance. And if you're buying, selling, or just trying to understand what your home is worth right now, this is a video you need to watch. I'm Nick Garcia with All City Real Estate. Let's get into what the numbers are saying. So I want to start by zooming all the way out and looking at the entire state of Texas, even though I'm in the Austin area. In June, Texas recorded just over 34,000 sales. That's up 7.2% from the same month last year. This sounds like a strong recovery, right? Here's where it gets interesting. That 7.2-ish is the raw unadjusted number. Once you strip down the normal seasonal swing, because June always sells more than January, the real year over year is 2.8. It's the same story with prices. The raw data shows prices are actually up 2.2%. Seasonally adjusted, price were up just 0.2%. So that's basically flat, right? So more transactions are happening, but the underlying trend is pricing is not moving much at all. And here's a number that actually matters most: inventory. Active listings in Texas grew 11.5% year over year. The state ended June with around 154,000. And so both of these numbers were above the 12-month average. In plain English, demand is improving, but supply is improving nearly twice as fast. Most homes are selling, but sellers have a lot more competition than they did a year ago. And that competition shows up in three places: price reductions, seller concessions, and homes sitting on the market longer. And that's a statewide issue, right? So now let's zoom into the four major metros, starting with the one most of you are here for. Let's talk about Austin, because that's where I do most of my business. Austin recorded 3,200 sales in June. Seasonally adjusted, that's 4.3% increase year over year. That's actually the strongest adjusted sales growth of any major Texas metro right now. So buyers are out there. Demand is genuinely improving, but, and this is the big but, active inventory also grew 11%. That brought Austin to roughly 14,000 active listings. And here's the number that explains everything else. The average sales price in Austin is about $600,000. At 80% loan to value, that puts the estimated monthly payment around $3,000. And that's before taxes, insurance, HOA dues. In Austin, that adds up really fast and people are feeling it. So what does that actually mean if you're buying or selling in the Austin area? Well, obviously, Austin isn't short on listings. It's short on buyers who are comfortable paying a $3,000 plus monthly payment before everything else gets added in. When homes are priced correctly and presented well, they are moving. That part of the market is real and true, but the increase in sales hasn't been big enough to offset how much inventory has come. Austin has improving activity. It does not yet have a full recovery. So if you're a seller, that means pricing strategy and presentation matter the most right now than they ever did. You're not just competing against the market, you're competing against every other seller who's fighting for that same shrinking pool of qualified buyers. Now let's head north a little bit, talk about Dallas-Fort Worth, because this market tells a pretty different story. DFW recorded about 9,500 sales in June. Seasonally adjusted sales were up about 1.5% year over year. Active inventory grew about 9%, reaching around 35,000 listings. Months of supply came in at 4.5, which was the lowest of any major metro. The average sales price is around $520,000. That works out to an estimated monthly payment of around $2,700. Of the four major metros, DFW currently looks the most balanced. That doesn't mean it's tight. Inventory is still growing faster than sales. The seasonally adjusted average price was also down about 1% year over year. But compared with Austin, San Antonio, and Houston, DFW currently has the best combination of transaction volume, affordability, and supply. So if you're a disciplined buyer, DFW still rewards that discipline. And if you're a realistic seller, you have a better chance of converting activity into an actual contract. San Antonio is the best example of this entire video why you can't trust the raw headline number. San Antonio reported 3,400 sales in June. That's a 16% increase from last year in the data, right? So that sounds pretty good. But once you seasonally adjust this data, they're actually around 1.5% year over year. And that is not a small gap. That's the difference between saying San Antonio is booming and saying San Antonio's underlying demand is actually soft. And it's exactly why I don't trust the month over month headlines that we see. Active inventory in San Antonio grew 11.5%, reaching about 17,000 listings. Months of supply climbed to over 6, the highest of any major Texas metro. But San Antonio is the most affordable of the big four. The average sales price was under $400,000, bringing that monthly payment to only $2,000. That affordability is a big help. But it hasn't stopped inventory from piling up. San Antonio has the buyers. It just has a lot more sellers competing for them, kind of, happening across the board. That includes builders who are leaning heavily on incentives, rate buy downs, and closing cost assistance to move new construction. So if you're selling a resale home in San Antonio right now, you're not just competing with other homeowners. You're competing with builders who can afford to buy down mortgage rates in ways individual sellers can't. Last up, Houston. One quick note, in Houston's most recent complete data runs only through May, so it's a month behind the other three metros. So Houston recorded about 8,500 sales. Seasonally adjusted, these sales were up 2.5% year over year, which is a pretty solid number. But active inventory jumped, get this, 19%. That's the fastest inventory growth of any major metro in this in the Texas area. Houston ended May with roughly 38,000 active listings, little under 6 months of supply. The average house here is about 446,000, which puts that estimated monthly at about 2,300. Houston is still doing an enormous transaction volume. Buyers here are showing up, they're making offers, but new and existing inventory is arriving faster than the market can keep up. That forces sellers to compete on price, condition, concessions, and patience. So overall, Houston is moving homes. It's also building a bigger pool of listings that are all fighting for those same smaller pool of buyers. Now let's bring it all together. So there's one number sitting underneath every one of these markets, the monthly payment, right? That's where the issue is. Mortgage rates are a problem. We're approaching 7% mortgage rates, and it's just making that monthly payment increase, causing some real issues, especially in the Austin area. So again, Austin comes in at around $3,100 for the average monthly payment. Dallas-Fort Worth, a lot less, a little under $2,700. Statewide average in Texas is about $2,300 per month. And remember, Houston is at $2,200 and San Antonio coming in the lowest for the metros at just $2,000 a month. Again, these numbers do not include the property taxes, homeowners insurance, HOA dues, which are increasing everywhere. Not HOA, but the other ones. And this is why even small movements hit really hard right now in the mortgage market. Buyers across Texas are already operating close to the edge of their budgets. A modest rate increase can knock tens of thousands of dollars off what somebody can actually afford. That monthly mortgage payment is really the thing controlling all of these markets, especially in Austin. It's having a bigger impact than any of the headlines, inventory counts, or any other data point that we can throw at it. So here's the bottom line. The Texas housing market is not collapsing. It's also not in a recovery, right? It's kind of somewhere in between, hopefully moving in the better direction, but mortgage rates are making it slow. So it's all about finding activity, but it has not found balance. Austin has the highest payment in all of the state. San Antonio has the deepest supply, and Houston has fastest growing inventory. And then DFW currently looks the most balanced out of all the Texas metros. So obviously every one of these markets deserves its own deeper, closer look. And honestly, that's what you need to, that's why you need to find a good real estate agent for that exact market. So if you're thinking about buying or selling the Austin area, let me know, and we can take a deeper dive into exactly what area is like specific neighborhoods, zip codes, everything needs to be super hyper local, very specific to the neighborhood. If you want me to some help in a specific neighborhood, or maybe shoot a video on it, drop a comment for your area. I'll break it down in a future video. And if you like these types of videos, share a lot of market data as well as neighborhood specific, where you should move, best schools, best places for families, lifestyle, real estate. Real estate's real estate. It's all about more than that, like where to call, what area, what house to call yours, your home, right? Thanks for watching. Appreciate you. Subscribe for future videos. And if not, then I'll see you for the next one.